So ultimately, some taxpayers are using the standard deduction, some are able to itemize. So to go a little bit further, in one of those itemized deductions, you mentioned the SALT tax, which is state and local taxes. How and what changes have been made with the Big Beautiful Bill as it pertains to the SALT tax?
Right. So like I said, if you're trying to add up those 4 different categories to be greater than your standardized deduction, which now for 2025, the standardized deduction is $31,500. So if you're trying to add these 4 things up, the way that it was written in the Tax Cuts and Jobs Act was that your state and local tax deduction was limited to $10,000, meaning that even if you pay more than that in state and local taxes, all you're able to deduct for that portion is $10,000. So the change that's being made now is that you're now eligible to deduct up to $40,000. There is a restriction here where you would have to be aware of sort of your income level to know whether or not you're fully eligible for that full deduction. But now that's kind of what's making headlines, is that you can deduct up to $40,000 instead of just $10,000.
And the key piece there is that this applies to those that are itemizing or are now able to itemize because they have that higher deduction amount with the SALT tax.
Correct, right. Like if you think about it, you have an additional $30,000 of potentially deductible expenses in a year that you wouldn't have had prior to 2025. So moving forward, it could open the door for more people to itemize and thus pay slightly lower taxes.